Hi everyone, it's Tuesday, April 12th, it's around 11 a.m. Major averages continue to show good resilience and have managed to recover most of the drop that occurred in January and February. From a trend standpoint, all major averages remain at or above their long-term trend lines, except for the Russell 2000. I wanted to point out that small caps continue to lag and have lagged for quite some time. Most of you know that there is currently over $16 trillion worth of assets in the open-end mutual fund industry, with only about $2 trillion worth of assets in the closed-end fund industry. What I'm about to tell you might surprise a lot of you, so please listen carefully. Some of you know that at McDonough Capital, we are suggesting new purchases of only closed-end exchange-traded funds moving forward. The reasons for this are many. First, when a large customer sells an open-ended mutual fund, and if the seller is a large institutional shareholder, the fund company may be forced to sell shares of various positions at precisely the wrong time in order to pay off the selling institution. Closed-end funds don't have this problem since they are traded on an exchange and immediately sold through the exchange to another buyer on a normal bid-ask spread without having to sell any of the holdings inside the fund. Second, the cost of closed-end funds are considerably lower than open-ended funds. In some cases, as little as 1/4 of the cost of a similar open-ended mutual fund. Third, closed-end funds are liquid intraday versus only end-of-day for open-ended mutual funds. And in the current environment, a matter of minutes or hours can make all the difference. Fourth, there tends to be much less style drift with closed-end funds versus open-ended funds, as these vehicles tend to be more index-oriented and more passive than actively traded open-end mutual funds. This reduces turnover in the closed-end funds and also tends to reduce the ongoing internal transaction costs. And lastly, most of you know that 80% of open-end mutual funds don't beat the S&P 500 index. So for all these reasons, our suggestions and models moving forward now include only closed-end funds and no open-ended funds. It's my belief that open-ended funds will eventually be fully replaced by closed-end funds for all the reasons I just mentioned. If you have an open-ended fund portfolio that you haven't reviewed lately, give us a call and we will see if we can make improvements for you. Next, let's turn to 401ks. If you have a 401k at work and you wish to be able to monitor it on your personal financial website, it's very, very easy to set this up. On your personal financial website, go to the Organizer tab, followed by the Accounts tab. Once you're on the Accounts tab, you will see an Add button in the upper right-hand corner. Click on the Add button. You'll be asked to enter the name of the 401k financial institution. Once entered, it will ask you to log into your 401k. Simply type in the user ID and password for the 401k, and the software will automatically connect you to the 401k to the personal financial website. Moving forward, as values change, the system will automatically update the 401k values and asset mix automatically. It's as simple as that. Now you can see how your individual and other retirement assets complement your 401k assets. It's very powerful. And let's also not forget to download your personal financial website to your cell phone. Everything is going mobile, and your money should be mobile too. It's very easy to place the personal financial website icon on your cell phone. Just give us a call and we can walk you through it very quickly over the phone. As always, if you have any questions regarding anything financial, please give us a call, and thanks for listening.